Hi there, today we're going to be talking about garbage stocks that are actually quality companies. We're comparing two waste management companies, Waste Management Inc. and Republic Services, and I will explain why you want to own at least one of these quote-unquote boring companies, as they are somewhat immune to economic cycles. I will briefly explain the waste management industry and compare Waste Management and Republic Services based on financials, dividends, valuation and their future. Welcome to my channel. I'm Tom from the Dividend Attitude Show, and I love to analyze businesses and their financial statements. I work as an analyst for a company that creates bookkeeping software. As a result, I've seen and analyzed my fair share of administrations. So that gives me a bit of an edge when it comes to analyzing businesses and financial statements. That is not to say you should blindly follow my analysis though. After all, I'm just a guy on the internet, whose face you can't even see. Before I made this video, I did not know that much about the waste management industry, to be fair. So I started reading up like I always do when I don't know much about a certain topic. In that regard, I want to point you to a PDF on the website of Waste Management, which perfectly explains how the industry works on a basic level. I will put a link in the description so you can see for yourself. First, an interesting fact about the garbage collection and recycling industry that you need to be aware of in these times. Although trash collection companies are recession resilient, in these unique times there is some impact on the revenue stream of these companies. The garbage collection has temporarily shifted to more residential pickup and less commercial pickup of trash due to the current work-at-home environment. Now let's take a look at Waste Management. Waste Management is the largest garbage collection company of North America. According to the Waste Business Journal, who knew the trash collection business even had its own journal, right? The waste and recycling industry generates about $75 million in annual revenue, with Waste Management capturing about 20% of the market. WM serves commercial, industrial and residential customers, of which you can see the breakdown here. So Waste Management turns trash into cash in a few ways, as you can see here. The majority of its revenue comes from collections, but they also earn money through recycling, transfer stations and others. But a bit less than a quarter of their revenue also comes from landfills. This is revenue from other garbage collection companies that pay a fee to Waste Management to dump their trash in the landfills of Waste Management. This has to do with regulatory hurdles and objections from towns, which make it difficult to build new landfills. But this provides a wide moat for Waste Management, since they have the largest portion of garbage and recycling facilities. They have contracts with government entities, businesses and towns. Most contracts with towns are tied to inflation, 40% of contracts are indexed and 60% according to market prices. On average, commercial and industrial customers stay with Waste Management for more than 10 years. That is awesome for us investors because it means they have predictable business which at its basic level already keeps up with inflation by building it in their contracts. Republic Services is the number 2 waste collection company in North America. They enjoy much of the same advantages as Waste Management as the number 2 because they also own a lot of collection and recycling facilities, which gives them a wide moat as well, and they are basically acting as local monopolies, just as Waste Management but in different geographical areas. And if there is something we should look for as investors, it is companies with a wide moat. So to have 2 companies with a wide moat in the waste management industry is absolutely awesome. First, I like to look at the market cap and the price performance to see how Waste Management and Republic Services stack up against each other. The market cap of Waste Management is about 20 billion bigger than that of Republic Services, or 49 billion against the 30 million of Republic Services. Year to date, it seems that Waste Management has not moved much with a plus of 2.5%, and that of course has to do with the big dip in March and the current health crisis, which both companies are still affected by. More on that later. On the 5-year chart, Waste Management did go up by a lot, as you can see, about 115%. Then what about Republic Services? We see a similar pattern there, with the year to date having a plus of only about 6.7%. But the 5-year price performance is at 111%. On a 5-year basis, both of these companies beat the 95% gain of the S&P 500. In fact, on a 20-year basis, both these boring waste management companies beat the S&P 500 on total return. Republic Services even had about double the return on the S&P 500 with 12% versus the 8.4% of Waste Management. The beta of Waste Management is slightly better at 0.82 versus the 0.87 average beta of Republic. This first round was very close, but Waste Management wins here with a better beta and a higher market cap. Before we dive into the financials of both companies, let's take a look at the dividends first. The current forward yield of Waste Management is 1.95% at the time of recording, while Republic Services has a slightly lower yield at 1.78%. Remarkably, both companies have 17 years of dividend growth under their belt, so they are tight on this one. As you would expect, Waste Management has a steady dividend growth rate in the range of 6 to 8%. For the 1, 3, 5 and 10 year dividend growth rate. And once again, Republic Services is in the same 6 to 8% growth range, so the two companies are still very close in the dividend segment. Both companies are exactly the type of dividend companies you want to own during a recession. Republic raised their dividends in the midst of the current health crisis with 4.9% in October. And Waste Management is going to raise their dividends with 5.5% with their next payout in March. The earnings payout ratio is also very close, with Waste Management at 54.5% and Republic Services around 50%. The free cash flow payout ratio based on fiscal year 2019 numbers for Waste Management is just under 50%, and for Republic just under 42%. I'm quite surprised that the Simply Safe dividend score is not higher for both companies, but I think that has to do with the price and revenue performance during the last recession. But at 74, Waste Management is still considered safe, bordering very safe. Republic Services is a little bit lower at 68, but also still considered safe. With all the dividend metrics being so close to each other, it is safe to say that on the dividends front, it is a tie. If you liked the video so far, don't forget to crush that like button and make it turn blue. If you enjoy videos like this where I compare two competitors to each other on a fundamental level, consider subscribing because I will do more of these in the future. The revenue growth of both companies is that of quote-unquote boring but steady companies. Waste Management has an average growth rate of 2.6% over the last 10 years, which is brought down a bit by the dip they had in 2015. Republic Services has slightly better revenue growth at an average of 3%, with 2 break-even years in 2012 and 2018. As a result of the current crisis, the revenue of both companies did decline slightly year over year. That has to do with the fact that more trash was collected from residential areas and less from businesses. I'm referring to these companies as boring, but that is because they are very steady companies that grow at a slow pace. Almost like utilities, but a little bit faster. However, for a balanced portfolio, you need these kind of companies in your portfolio as well. With a slightly better revenue growth rate, Republic wins this round. Let's take a look at the margins. For Waste Management, we can see the gross margin is at 38.6%, the highest in 10 years. And the operating margin is at 17.8%, also on the higher end of the 10-year average. Republic Services has a slightly higher gross margin at 38.8%, which is right around average. The operating margin is slightly lower at 17.5%, which is on the higher end of the 10-year average. Again, it is unbelievable how close these companies are. Waste Management has a slightly lower gross margin but a slightly higher operating margin, so again it is a tie here. The net income of Waste Management is fluctuating quite a bit, more than the revenue with an absolute bottom in 2013. Whenever I see a dip like that, I dive into the annual report to see what was going on there. To keep this video on point though, I will leave that up to you as homework. Waste Management had an average growth rate of about 8.4% over 10 years, with 1.6 billion in 2019, which was actually a 13% decline from the prior year. The net income growth of Republic Services is much higher at an average of 12.4% and was around 1 billion in 2019. Again, we do see 10% dips in some years. With a much better net income growth rate, Republic Services wins this round. The free cash flow of Waste Management went from 2.43 to 4.16 per share in 2019, for a growth rate of 8% annually. Again, Republic Services has a higher annual growth rate with about 12% per year since 2010. It is both interesting and good to see that there are a lot less swings in the free cash flow than the net income, and the dividends were well covered all the time. Republic Services books another win here and is taking over the lead. Let's take a look at some ratios to determine the health of both companies. The debt to equity of Waste Management is quite a bit higher than I would like at 1.88, and it went up quite a bit from the 1.39 in 2010, so that's definitely something to look into further. Republic Services is a lot lower but still above my threshold of 0.5 at 0.98. So I would like to take this as a starting point to do further due diligence on why the debt is quite high, as it could be inherent to the industry. The current ratio of Waste Management looks much better at 1.97 and is actually almost double that of the previous years. That has to do with the fact that WM had a lot more cash on its balance sheet compared to the previous years, while the current liability stayed pretty much the same. In the most recent quarter, the current ratio was at 1.20 though. The current ratio of Republic Services is quite low at 0.52 in 2019 and 0.81 in the latest quarter, which is well below my threshold of 0.1. So again, that is something to look into further. Then what about the quick ratio? As a reminder, the quick ratio is the most liquid assets, such as cash and short-term investments, divided by the current liabilities. Waste Management has a quick ratio of 0.87 in 2019 and 0.04 in the most recent quarter. Republic Services again has a much lower quick ratio at 0.47 in 2019, but a bit higher in the most recent quarter at 0.73. Again, I prefer to see a ratio above 1 here. Although Waste Management has the worst debt to equity ratio, it has a much better current and quick ratio than Republic Services, so Waste Management wins this round. And then next, let's take a look at how well Waste Management and Republic Services are at using their assets to create net income, or the return on equity. As a general reference, Warren Buffett considers the consistent return on equity in the mid-teens as a good indication that a company might have a good, sustainable competitive advantage, or a moat. Waste Management has a very consistent and high return on equity of 25% in 2019, and it has been in the 20 to 30% range in the last 4 years. The return on equity of Republic is quite a bit lower at 13% in 2019, which is on the higher end of their 10-year average, but it has been consistently above 10% in the last 4 years. Similarly, the return on invested capital measures how well a company is using its equity and debt to create profit or net income. The return on invested capital is about 11% in 2019 for Waste Management, and has slided down a bit in recent years. The return for Republic is at 8% in 2019, which is actually on the higher end of their 10-year average. Credit rating gives you an indication of how cheap the company can borrow debt, which is always important to know, because debt that is used well can help a company to grow faster. Waste Management has an excellent S&P credit rating of A-, while Republic Services is at BBB+, so both are investment grade. In this round, we have a clear winner with a better return on equity, return on invested capital and S&P credit rating. Waste Management wins this round. We now know a lot about the past, but what about the future of these companies? What are the growth catalysts? First, a look at the estimates. Analysts on Fastgraphs are expecting the earnings per share for Waste Management to be at 4 in 2020, 4.55 in 2021 and 5.07 in 2022. So there's an average annual growth rate of 13.4%. Republic Services is expected to grow from 3.39 in 2020 to 4.03 in 2022, for an average growth rate of 9.4%. Earnings per share of 3.71 in 2021 is on par with the analysts on Yahoo Finance. So both companies are expected to grow quite fast in the next 2 years, which is great news if you're an investor or want to become an investor in this company. Both Waste Management and Republic Services mainly grow through acquiring smaller garbage collection companies. So as the number 1 and 2 of the industry, their moat will get wider and wider, the more smaller companies they acquire. This gives them absolute pricing power in many areas. Again, as a potential investor, I think these expected growth numbers look great. But Waste Management is pulling away further as they are the clear winner of this round. But what about the valuation? Are these two companies under or overvalued? Looking at this graph, Waste Management looks quite overvalued according to Fastgraphs. The price line, black, is both above the orange, fair value, and blue line, the price the market has historically valued Waste Management at. So this is clearly indicating that Waste Management is overvalued. Since the price graph has been more around the blue line in the last 4 to 5 years, we will calculate the downside based on that. If the price would return to the blue line, we are looking at a negative return of 3.5% annually. And then the graph of Republic Services. I honestly had to look a few times because the trend is so similar to Waste Management that I thought I was still looking at the graph of Waste Management. If Republic would return to the blue line by the end of 2022, you would be looking at a negative return of 7% per year, so double that of Waste Management. The valuation of Waste Management of Finbox does not look pretty. They see a potential downside of almost 19% to about $95 per share. Ouch. Republic Services is looking slightly better with a potential downside of 16% to $80, so not looking great either. Both businesses are predictable businesses with stable dividend growth rates, so they are perfect candidates for the dividend yield theory. Waste Management is overvalued and is about 7.2% above fair value according to the dividend yield theory. Similarly, Republic Services is also overvalued by about 12.8%. So unfortunately, both companies seem quite overvalued according to all methods that we have looked at. But who wins this round? We will find out in a minute, and then we will also know who is the winner of this battle between garbage stocks that are both quality companies. If you enjoy videos like this, be sure to check out the other battle videos I made as well, by clicking on the playlist shown in the bottom right. For now, back to this battle first. Waste Management is the least undervalued according to Fastgraphs and the dividend yield theory, so Waste Management wins this valuation round. The valuation is the only thing holding me back from investing in one or both of these great companies. These stocks are very close, but the overall winner of this garbage battle is Waste Management. Until next time, bye bye.